Hey, everybody. Welcome back to another podcast episode. So, I do have a special guest today, and I will just give her a moment to hop on. All right. Hey, I'm getting ready to send you the invite now. Okay. All right. Hey, good
How are
morning.
you?
I'm well. How are you
I'm
doing?
great. I'm great. Can't complain. How are you?
I'm doing good.
Good to
My ring light is not letting me be great here, so I'm just going to have to
look. I
work with it.
was just acting crazy. I'm like, get it together.
Get it
Don't do it
together.
today.
No, for real. All right, so yes, I'm so happy to have you. I'll just do a quick pod intro and then we'll hop into it, okay?
Okay, perfect.
All right, so welcome to the Mom Keys to Mental Peace podcast. I am your host and sister in Christ, Tari Khiya Allen Butler, and this is a podcast for millennial moms who struggle with limiting beliefs and want to learn how to make over their mindset and lifestyle in faith and family. Tap in each week for the Mom Keys to Mental Peace podcast, where you will learn major keys to stop coming up short on your goals and start leveling up for the type of lifestyle you desire God's way. Ready to level up? Let's do it. All right, so as I have shared, we have a special guest today, Mrs. Gena James. She is a tax professional, and I have worked with her personally on my taxes last year, and it has been a great experience. On her behalf, she has been professional, she has been patient, she has been informative, giving me all the information and resources that I need to make it through this tax process. I know taxes can be scary, especially when you get into different tax brackets or you're a small business and trying to make sure all the things are together. So my experience with Miss Gena has been amazing, and she has really helped kind of ease some of those tax jitters for me and really made the process comfortable. So I'm so happy to have you here. I'm excited to get into this conversation.
Thank you so
Did you want to share any other background information? That was my, testimonial with you, but any background information for how you got started and everything with doing
Of course.
taxes?
So hi guys, I'm Gena James. So I am the owner of Genwell Firm. And Genwell Firm is basically a tax preparation firm, but we don't just provide taxes, right? We pride ourselves on providing education, but also resources, quality, and then you can do it from the convenience of your home because we're 100%
Mhm.
virtual. But the reason I got into it because I'm also a business consultant, and most of the time when you hear people talk about their business taxes or taxes in general, they say, "Oh, I don't know much about taxes," right? So one thing that I pride myself on is providing an education. So yes, we're going to prepare your turn. We're going to take the stress off of you, but I still want you to understand why this happened, why this didn't happen, what we can do next year to make things happen better, because I do want you to understand your individual situation. So guys, that's a little bit about me.
Yes, and that literally sums up my complete experience with her, so I can vouch for that. So, hopping into our first question, what are some common mistakes that you see people make when it comes to filing their taxes?
I think one of the biggest things is failing or forgetting to report income. So let's say you started a job like February, right? So that job you started in January, the next year that's off your mind, right? So you may not think about it, or they may send your W-2 late. So you're ready to hurry up and file your taxes, and then you fail to report income. So typically what would happen is either a rejection, or that can't even raise a red flag for an audit, because your employer is already going to report the income to the IRS.
Mhm.
So that's why I always tell people, if you started a new job, if you're existing client and I see you started a new job, when did we start that new job? Did we start it in February? Do we have a January W-2 on the way? And then also feeling like, oh, well, it just was a little this. Well, that little could have put you in a different tax bracket. So the IRS is like, we want to see the little as well. So making sure that you report all of your income would be one. And then missing out on common deductions or credits. So one of the ones that most people miss out on is the child care credit. So basically, if you have a dependent or someone that goes to daycare because you have to work, you can claim that. But that's one that a lot of moms miss out on. So I wanted to throw that out there as well.
Yes, I'm so glad that you touched on that. And that kind of goes into one of the questions I have, like, Do you have to file your taxes if you're a small business owner but feel like, oh, it's not that much? And you just kind of touched on that. I know that was a situation I dealt with my husband in regards to my small business, where he felt like, oh, you don't have to report that or you don't have to turn that in. And that was my mindset for a while too. Like, oh, I'm not out here making six figures, or oh, I'm not out here, but I have a business bank account. I have an EIN number. Like all of that stuff is being reported to the IRS and they're looking for a report from me. And this is something that you taught me and helped me to understand. So thank you for clarifying that, because I can see that going left for a lot of people just for simply not knowing that
And
information.
also, it's okay to report zero on your business, right? So if you're not making any money and you didn't spend any money, just report zero. But when they look at it, they look at, okay, this person is being honest with me, so we can trust them, right? I don't really have to go into all of their details and stuff. And then if you didn't spend any money, you still can claim your expenses. So that can potentially help lower your taxable income, which if you're making money, you're trying to get it lower. We don't want to pay them,
Right.
like you want to pay them as less as possible because we're paying them regardless. So that can potentially lower. And then one other thing I always say is most of the time we don't look at our numbers. So we don't know what we did last year. That income tax return helps you with that. It tells you how much you made, but also how much you spent. Because you may look at, oh, I made 60,000 this year, but you also spent 50. So technically you only made 10. So that also brings you into the year and okay, this is what happened. So then you can strategize and help hit those goals next year, because you're like, okay, I need to spend less money. I need to make some more money. If I'm looking to purchase a house, I'm planning for that. So you know what your individual situation is, so you're not lost.
Yes, girl. All of that is so true. And that was something I think that I was able to find out last year, from keeping track of everything, to turn into you that I am spending more than what I was making, which resulted in me, raising my prices this year. So I'm looking forward to see, how those numbers change. But again, no, I feel like we just kind of have an idea in our head. Oh, I spend about, or oh, it's about. But when it comes to these taxes, you've got to know those numbers down to the penny and exactly where things are. And I think being having a tax preparer to give you that insight and wisdom on how to set things up really helps. It really, really does. All right. So I know a lot of us, with a W-2 job, most of the time before you start your job, you have to fill out certain tax forms like your W-4 form and stuff like that. So can you explain the difference or the importance of each filing status? So for example, head of household, married filing jointly, married filing separately, and how do these filing statuses affect the taxes taken out of your check?
Okay. So single, I'm gonna start with single. So single is basically you're a taxpayer. You don't have any dependents and you weren't married the last day of the year. That's what a single status is. Okay. Head of household would be you were also not married that last day of the year, but you do have a qualifying dependent or a qualifying child that you provide more than 50% of expenses for. Okay. So that would be a head of household status. Married filing jointly would be the couple decided to file their income taxes together. Um, and they were married that last day of that year. Also married filing jointly, you typically get more tax benefits and deductions with that, as well as and then we go to married filing separately. So married filing separately is the married couple decided that they wanted to file separately and they claim their credits and their deduction separately. Now, what I always say with married filing separately is even though you filing separately, you still need to consult each other, right? Because we don't need both of you claiming the child. We don't need both of you claiming the deductions. We don't need both of you claiming the mortgage interest. So we need you guys still to consult. In most cases, married filing jointly does benefit you better. But in every situation is different, right? So some people may choose to do that. That's fine. But just make sure that y'all still coming together. Hey, you're going to claim the child. I'm going to claim the mortgage interest. You claim our IRAs. I claim this. So that y'all guys are still on the same page. Because what we don't want those red flags to come up on the IRS like you guys are trying to get over. So I want to start with that. The second thing is, as far as your W-4, your filing status determines how much taxes you pay on your income. So if you don't put the correct filing status, what happens is you're paying the incorrect amount of taxes. So let's say you both are married and you file separately, but you put married filing joint and you both claim the kids. Well, you both aren't getting credits and deductions for the kids. So what happens is you're basically not balancing out. So you're going to end up owing, because in the IRS eyes, it looks like, okay, well, we don't need to take out all this because they're going to get this at the end of the year. I mean, we don't want them to get this at the end of the year because the IRS don't want to pay you a refund, right? The refund is for overpayment. So technically during the year, you pay more than you were supposed to. What they want is, the whole goal of the W-4 is for the government don't owe you and you don't owe the government. That's what. And technically, I don't know about you, but I prefer my money during the year. I would prefer my money during the year. Now, that does require you to save and, be in control of your money and things, but I would prefer not to owe the government and the government don't owe me, because then I can do what I need to do throughout that whole year with my own money. So that's just about that.
Yes, and that brought a lot of insight to me, the way that you explained it to me last year, because with me just getting married, I realized that I had to change that. And I was so confused about how much is being taken out with the dependents and things like that. And the way that the example that you gave really brought that light to me to really help understand what that means. Because I feel like a lot of us feel like if I have kids, then that means I'm going to get a refund automatically. But those numbers for that filing status really I didn't realize how important that filing status was initially on that form to determine what's coming out through the year versus at the end of the year. And like you said, the goal is to not have to pay them, and then ultimately for them, not to give you money back. But I would like, a little something back. But I understand.
Right.
You explained like what that means, when you are receiving a refund check back.
And even like the last line, it asks you if you want to take additional out. So if you know you want to see something at the end of the year, you can put additional amount to take it out. So everybody's situation is not the same, right? But you're in control of how much they take out. You can plan if you want a refund, like, okay, look, let them take an extra $100 out, and things like that. So you can kind of just control that situation.
Yes. And I feel like this is something that our, people coming out of high school need to know, because I know my niece called me, bless her heart. She's like 20, 19, 20. And she's like, Aunt Tari, I don't know what's going on with my check, because when I do the math, I'm supposed to get this amount, but it's not that amount. So I had to explain like her taxes and checks to, like, sis really did not know what was going on and felt like they were getting over on her. But I had to explain like this out deduction means this, and she has a child, so she needs to know about that. So, from our conversations, I was able to, give her a little bit of insight on what that looks like. But I feel like it's so important for them to know that, because they don't teach that in school. And then you just writing something on the paper and don't understand why of why you're putting what you're putting and what those numbers mean.
And you get it at the worst time ever, right? You just got the job, they gave you 20 million paperwork. You're like, girl, I don't care. Just put anything on this, right? Yeah.
I'm just putting anything down as long as y'all got my routing and checking number, baby. Those are the only numbers that matter in our minds, and we're just rushing through. I mean, I'm guilty of that for sure. I don't know what I put on them papers in the past for deductions, but we need to know. Like, that's important to know.
Definitely.
All right. So we touched on that. Can you explain how the number of dependents that you claim affect your tax refund and the taxes taken out of your check?
Okay, so the same thing basically, but I'll go a little into it. So we have the child tax credit as well as the earned income tax credit. So based on your income, you may qualify for the earned income tax credit as well as your dependents. So what that does is it lowers your taxable liability. So let's say you have 2 kids, you're married, your taxable liability will be lower than someone that's single. So with that being said, it allows for you to pay less taxes, and when you fill out your W-4, they take out less taxes because they are aware that you'll be paying less taxes. Does that make sense?
Yes. All right. So I hope y'all are getting this. If you need to run back with your pen and paper, please do so. So I did pose a question to my audience, or an opportunity for them to share questions for a quick little Q&A here at the end. And these may be like specific tax questions that they have, or something that you can take notes about, or, pull from what you need from it.
Okay.
So the first question that we received is, what is an exempt employee and how does exemption status affect taxes?
Okay, so typically an exempt employee would be someone who's on a salary. Typically you see that for executives, admin, things like that. What typically happens though is when we think of an exempt employee, we think they don't pay taxes. Okay, and they still are required to pay taxes on the income that they make. Okay, so the tax status, the percentage and things may change, but they're still required to pay taxes on that. So that's a little bit about what an exempt employee is.
Okay. What can you claim as a single filer, head of household, to keep your tax payback costs down while making over 85K, owning your own home, and no
Okay.
dependents? So there was a lot of parts on there.
Yes. So mortgage deductions, mortgage interest deduction. So you can claim that deduction, right? As well as the main thing for that individual will be tax planning. So they need to not just wait till the end of the year, which I don't think anyone should, but definitely them. They shouldn't wait till the end of the year. They need to make sure that they're paying, they're contributing to 401k and IRAs, because those have tax advantages for them, as well as a health saving plan. If their deductibles is high on things, they can actually do tax-free withdrawals from that to pay for their deductibles. So I would say that, but mainly tax planning. So looking at what they made, making sure that their W-4 is correct. In some instances, like I have a client who made over $100,000. We have the W-4 taken out extra, as well as we still do estimated tax payments. So most of the time when you think of estimated tax payments, you think of a business owner. But higher income people can do those as well, just to make sure at the end of the year we're not surprised. I don't want to give the government $20,000. I don't know about you. So just making sure that we're staying on top of that. You can pay those quarterly. But that would be my main thing. The mortgage interest, obviously, contributing to their 401k and the IRA. And then also saying if their employee match. If their employee match, they need to be contributing a max for that match, as well as that's going to help them with their paying taxes. And then the health savings account, because these contributions are tax deductible, tax free. And then tax planning. That's what I would say.
Okay. So what I'm hearing from this is really is like, you've got to have your numbers in order, and if you don't know, you need to be in connection with somebody who knows. And this is kind of a sidebar question. When people are looking for help from somebody, what are like some red flags versus green flags when working with a tax person? Because I know that some people don't take that next step or reach out because they're afraid of getting scammed or somebody stealing their money. We've heard of this situations, especially with like celebrities that make a lot of money. I just saw Kenan Thompson from All That was saying that somebody got him for like 1.5 million, their tax person. So like, what are some red flags that they should look out for when seeking this person for help?
So what I always tell people is you need to interview that person, right? So if
Mm-hmm.
your job interview you interview them. You see if they're best for your individual situation, because all situations aren't the same, right? So just because I'm good at what I do, I still may not be good for your individual situation, and that's fine. I'm fine with referring out, right? So making sure that you're interviewing them. But also the prime thing, most of the time when people get messed over by accountants and tax professionals, it's because they don't have the education themselves, right? So you just hand over your books and you're like, hey, take all my books, right? But you don't have the education. You don't know what your profit is. You don't know what your loss is. They tell you spend this much on taxes. They tell you pay your sales taxes, this how much it is, but you don't look at the books. So I think the main thing is we have the education ourselves. Because whether I do it or you do it, the goal is for it to be done accurately. So if you have that education, then those type of things typically don't slip through your fingers. But I think that's the main thing, because we're taught we don't need to know anything. I saw a video earlier. and it was, I can't think of who it was, but he was talking to another business person, and they were saying, he was like, what are one of the main things that he want every business owner to know? And he was like, I need every business owner to understand accounting. And the guy was like, and they're both millionaires. The guy was like, well, couldn't they just hire an accountant? He was like, they can. He was like, but they still need to know the basic terminology, because when the accountant comes to you and tell you you profited this much, you don't know the difference between your profit and your loss and your net and your gross. So at the end of the day, you just listening to the accountant. And they could have just told you, okay, well, we're going to make this investment and this is going to do this. And you're just saying yes, but you really don't know what you just agreed on. So I think the main thing is understanding it yourself. And that's why I provide my clients with the education. Now, what they do with that education, it's up to them. But I provide them with that because I want them to be able to say, oh, no, Gena, look, what about this part? Like, I want them to question me. I love that. Like, question me so we can be on the same page. Oh, actually, I would prefer to go this route. That's fine. But I think that's the main thing.
That's so good. And I can say that that was a green flag to me working with you, like, our text thread.
Right.
If I have a question, I'm coming to you with it, and you always, respond or give me a resource or give me some type of information and explanation, and then you make sure that I understand. And if I don't understand, you're re-explaining it. Like, that was a green flag to me, because I feel like as the Black community, especially with a lot of us trying to get to this new tax bracket or making more money or starting businesses, I want things to be done right and with integrity all the way through, from the service that I'm doing to the books and the numbers and the taxes. So I think it's really important, if you are stepping into that, new space, or you have come to this new increase of money. Everybody want increase, Lord. Everybody want increase. But with more increase comes responsibility. And I think it's worth learning the education, the terminology. Not saying you have to go to school, but if you don't understand something, don't just sit there like, okay,
Right.
ask questions, ask for explanations, ask for examples, so that when you walk away, okay, yes, I do understand what this is and what it looks like. So thank you for explaining that.
No problem.
All right. And then oh no, sorry. Our next one is, what does it mean to write off things for taxes? And what are some things that you can write off that most people don't know about? That's a good question.
Okay, so right now will be basically using expenses or deductions. So in some cases it'll be expenses if it's a business, or deductions. One of the things is home office. You may or may not have heard of that, but if you have an additional room, like so right now I'm in my home office. But if you have the additional room, you can basically, it's a standard method where you can do 5 times the square foot, or it's a more complex method. But basically, you can write off a certain percentage of your expenses. So, like, for instance, we can write off a percentage of the rent. We can write off a percentage of the light bill. We can write off a percentage of the internet. But all of those bills, because of the fact that based off the square foot of this room, based off the square foot of the house, because this room has to be solely used for business
Right.
stuff. So this room is solely used for business. I don't use it for anything else. So that's one. That's really a good one. One that I run across a lot with military, and with me being a military spouse, I see this a lot, is military expenses for moving. So let's say the military took care of 3,000, but you really spent 10,000. You can write off the difference. So you can write off that different amount because you were required to move for the government. That's another good one. I'm trying to think of some more.
So pretty much a write-off is things that you have paid for in order to run the business, and you're able to be like exempt from that payment, or like reimbursed
So
for
basically,
that payment.
it lowers your taxable
Okay.
liability. So you're not refunded it. So I know a lot of people be like, oh, well, I can write this off. I'm not
Mhm.
paying for it, right? But it's lowering your taxable income, which is lowering your taxable liability. So let's say, for instance, you the example I gave earlier, you made 60,000, right? But you spent 50,000, so technically your taxable income is only 10,000. So you only be paying taxes on the 10,000 versus the 60,000. Does that make sense?
Yes.
Okay.
Yes.
And then another one I put in my notes was health savings contribution, just because I talked about that one earlier with a higher paying income person, especially if you're paying high deductibles. Before my husband joined the military, let's not talk about how much I was paying in deductibles
Um,
insurance. So that was very beneficial because those deductibles I was able to take tax free, as well as it was a tax benefit for me. And then I see a lot of sponsorships and donations for events in North Carolina. So I wanted to talk about this one, is because that is a deduction. So let's say you did event planning, right? And you came and you decorated my whole event, but typically that costs $10,000. You just need to send me a $0 invoice for $10,000, and you can claim that. Let's say you did a $500 sponsorship, you can claim that as well. Because what that is that's brand awareness, and you need brand awareness and
Right.
marketing in order for your business to grow. So that's really a good one that most people don't think about. You might be like, oh, I'm gonna just donate 2 tickets. Okay, well, write off those 2 tickets that you donated.
That's so good. Thank you for explaining that.
Mm-hmm.
All right, and then our last one, we may have touched on this. It's about the W-4, but she says, what are some possible adjustments that need to be made to your W-4? And this was her concern. The 2018 tax cut for most making over 400K is hitting a lot of people. Every year for the past 6 years, it has hit a tax bracket to make up for the cut. It was 250K to 400K bracket at first. It came down to a bracket every year, and now it's hitting the poorest bracket. Lots of people who are used to getting a refund are not going to get one. They may need to make adjustments to their W-4. The state changes hit a lot of people last year. They didn't make changes to their W-4 and owed the state a lot of money.
Okay. So this is the thing that the government is going to keep changing the W-4, because like I stated earlier, they don't want to give out refunds. It costs them a lot of money. So they're going to keep changing it, because the goal is each time they change it to get more accurate. So it's going to keep changing. So I don't want us to think about that aspect of it. I do want you to know that you can use resources like the withholding calculator on the IRS website. And it can kind of tell you about your individual situations. You can always book a consult with me, and we can break down your individual situation. But I think the main thing is understanding what's actually going on. So understanding what's your tax percentage. How much percentage are you paying on your income? Looking at that throughout the year, but making sure that your W-4 is 100% accurate. So like I have a client who in their divorce decree, they alternate claiming the children every year. So every year they need to update their W-4.
Yeah.
Because if they don't, then they're going to owe on the years that they don't claim the children, because it looks like, because they don't have the children to lower the taxable liability. So just making sure your W-4 is as accurate as possible. If you wanted to, you can always take out additional have it take out additional money on that last line. I think it's the last line, as well as estimated payments. But I think if you start learning, like, okay, this percentage of income costs is this amount of income tax, and looking at that, okay, if I'm gonna make $100,000 a year, I need to pay this amount of income tax. Okay, that allows for me to know if they're not taking out enough, putting it on the side. So with my business owners, I always look at what your goal is, multiply that by what you're gonna be taxed on for your tax bracket, and then put it in a different savings account.
Yeah.
Because they're moving towards this, you start doing the same thing. Just to prepare for it. Obviously, you can have them take out extra money. You can do estimated tax payments throughout the year, but things like that.
Yeah. That's so good. Even the the piece about the divorce, and claiming dependence. I know when my parents divorced, I just remember the conversation about before talking to my dad, how it was supposed to be his year, but my mom ended up claiming me and how that, messed up things. So, and I guess we can close with this. When it comes to claiming children and stuff, if someone does claim your kids without you wanted them to, is there something you can do about that? Like report it, or do you just have to wait to the next year and try to beat them to it? Like how does that work
Okay, so
out?
if someone, so in the divorce degree, like for that instance, let's say someone claimed the child, it will say like alternate years. So you can send that information in. So, but with that, you would have to paper file the return. So
Hmm.
for instance, I had a client who, last year they were filing their 21 and their 22, right? So when we go to file the 21, someone had already filed their 21.
Hmm.
What we had to do is we had to mail it in with proof of their identity, all of that stuff, and the identity theft form. So yes, you can. I don't say just let it go.
Yeah.
No, what you do is get in with the correct paperwork, as well as today identity theft is worse than it's probably ever been. I always tell people, make sure your social security numbers is locked, make sure your kids' social security numbers is locked. Like, it's just the amount of theft and identity theft you see is ridiculous. Now, obviously, if you know the person, that's a little different. But we do have instances where, like with that client, we don't know who did it, right? They file taxes for them. We have to send in a return. And obviously that take longer. It's more of a headache. The client is like, why me? But at the end of the day, only thing we was able to do is paper return it, send in the identity theft affidavit form, and make sure I gave her all the resources to lock her identity from every credit bureau. Make sure that it's locked, and then we file for the IPIN. You can also do that for your kids, so you can do the identity pin. So when you file your return, we have to enter that as well.
Okay,
so
that's good to know.
I would do. Mm-hmm.
That's good to know, because scamming is at an all-time high everywhere, not even just on Texas, on social media, on DoorDash, like everywhere. People is out to get a bag by scamming and lying and doing all this extra stuff. So that's a great resource. I might talk to you further about that later on. But thank you so much, Gena. You gave some really, really good advice. I pray that this was helpful. In closing, what are some services that you provide, and how can people get in touch with you if they want to work with you?
Okay, so we do provide free consultations. You can go to my website, which is www.genwealthfirm.com, and you can just click book a free consultation. So we offer tax preparation, we offer tax planning, we offer bookkeeping, and things of that sort.
Yes, and I will have all the information in the show notes, all those links to her website, so you can get in touch with her.
Yes, ma'am.
All right. Well, thank you, Miss Gena. I will talk to you soon, and I pray that you all have a great rest of your day. Thanks for listening.
Thank you so much for having me. Bye.
Bye.